Good afternoon. This is Conrad Kowalski with Excalibur Financial Services with your weekly market update. Today is Tuesday, August the 23rd, and we're just after market close. The first 2 days of this week, we've seen the S&P 500 up slightly, but this is primarily a recap of last week. The data that we will be showing you comes courtesy of our partners at JP Morgan Asset Management. So as always, we thank them for this information. This is an overview of the slide, and we'll be focusing on several sectors of it. The first is the performance in equities, or the stock market here in the US and around the world. As you can see under the 1 week column, the S&P 500 was flat, with basically most indices around the world flat. The most movement we saw was in developed international markets, which is the MSCI EAFE, down a little over 0.5%. Of note is that even that area, which has been the worst performing year to date, as far as equities go, year to date, they're up about 1.7%. A few other year-to-date numbers to point out is the S&P 500 up almost 8.5% on the year, and the emerging markets just blowing it out of the water, up almost 17%. Now, as many investors know, emerging markets are quite volatile, so when they're up, they're up. When they're down. But we're pretty happy about the performance, especially being that this is an area that we overweighted for our clients at the beginning of this year. Moving on to bonds or fixed income. Overall, it was a negative week on a total return basis for bonds other than high yield and also preferreds, which are not represented here, but somewhat similar to the high yield market. You will see, though, that year-to-date bonds across the various categories are up, as there has been some flight to safety. It's quite surprising that they're up as much as they are, being how low rates are. As you can see, the U.S. aggregate bond yield right now is 1.96%, and interest rates are even lower overseas. Continuing with the rate theme, we can see that Treasury rates did rise a little bit, which means that the demand for Treasuries dropped just a little bit. There could be various drivers for this, and it's not a large move, but there was a little bit of a drop in the demand last week. Of interest is the 3-month LIBOR, which is the London interbank overnight rate, which is a measure of interest rates in England. And since the Brexit, as you can see, that has dropped from June 30th to August the 12th, but over the past week has remained stable, which is good news considering the uncertainty following Brexit. One other item of note is actually that the prime rate has stayed the same all year. This slide doesn't show since December 31st of 15, but has stayed at 3.5%. And mortgage rates have actually, since the beginning of this year, dropped from 4.19% to 3.64%, which is also a bit surprising, being that home sales have been increasing, so the demand for mortgages should be up. And then in the last slide that we'll review today is U.S. equity style performance year to date. And what this represents is what areas of the U.S. stock market have been doing. And the upper left-hand box is large cap value stocks. So these are large companies, typically pay dividend, and have a low price to earnings ratio. In other words, relative to how much profit they bring in, the stock price is relatively low. As you can see, the value category, whether large, medium, or small, moving down that left column, has outperformed the other areas of the U.S. stock market, whereas growth, while still up, has not performed quite as well. Looking at the week ahead, we will have some more economic data as we have every week. We'll have new and existing home sales data, durable goods orders, consumer sentiment, and the second quarter of 2016 real GDP. This will be actually the second estimate released. That data, as always, can markets, as can any surprises. Thank you for listening to this weekly market review, courtesy of Excalibur Financial Services. If you have any questions, would like a second opinion on your investment portfolio, or anything related to investments, financial planning, or insurance, please don't hesitate to contact us. Contact information is on the slide currently presented. Thank you.